Realized vol jumped higher this week. BTC up near 40 now. Ethereum is above 80. Front end BTC implied vol was up about 7 points, whereas ETH was only up around 4. But obviously ETH is a hell of a lot more expensive to start with. Carry did flip negative, quite deeply negative actually, in the order of magnitude of 20 vols on ETH. A little bit less, about 5. Not even 5 actually, less than 5 vols on BTC. So you can see implied realized spread very, very narrow, marginally in favor of realized vol on BTC. But look how big the spread is on Ethereum. The realized is much, much higher. Looking at the OHLC charts, we are seeing multiple breaches of implied moves. You can see Bitcoin did it 1, 2, 3, 4 times in the last 5 days. Ethereum absolutely knocking it out the park there with a move that was kind of 3 times the implied move on the Jackson Hole. And then we've broken down pretty hard as well, 2 times the implied move on the way back down. So let's just say it's been a tough environment to be short gamma, which we had warned about, saying we were at a bit of an inflection point here, probably selling gamma is a bit dangerous. Now you've got BTC threatening that 110k level. I still think it's quite a high risk to be shorting gamma in crypto markets right now, especially because crypto markets never sleep. So if you don't have an automated hedging system in place where you can be short gamma and while you're asleep, it is neutralizing the delta for you because this market never sleeps, then that would be extremely dangerous to just run the short gamma and wait and see what happens in the morning, I would say. Looking at the term structures, we were kind of contango in Bitcoin. We are flattening out a bit, going inverted even actually in the front end. But then once you get to 30-day, it goes to a bit more of a normal contango. So just a bit of a front end gamma bid coming into Bitcoin because it's moving around a bit more. Ethereum, you can see a bit more of a parallel kind of shift higher in the surface, projecting it all the way out to kind of December and March. It's still catching a bit of a bid there. Looking over at the time series, usual form where, you saw before Jackson Hole, you got that spike on vol. You then got a sell off into the weekend in the front end. And then obviously as we've rolled over, you've seen a front end bid come back in vol. So see those waves in the red line, that's the short end of the vol surface. Looking at skews, interesting, been winging around quite a lot. It was about 6 vols in puts in the front end Bitcoin, spiked to just above neutral on the Jackson Hole rally, and then it's faded all the way back, hitting like a nearly -8 there, but settling in at about -4 right now on Bitcoin. Ethereum was in put skew before the rally. We were down at 4,200 or whatever. We ripped, got back into call premium, and then now that we've faded again from a new all-time high, we are sitting pretty neutral across the curve. You can view that here with the term structures. As you can see, I've got the pink line in there, which is also showing what it was like 3 days ago. So you can see where it was a week ago, which is the red line. The pink line is the spike that you got on the Jackson Hole rally. And then the blue line is back to where we are today. So Bitcoin pretty much giving back all of the call premium that it picked up on the rally, giving it all back. Ethereum probably giving about half of it back, as you can see, sitting at roughly neutral there. Long-term skew though on Bitcoin didn't really budge, hasn't really shifted into put skew as we go further out the curve to June. So I'd argue there is still the feeling in the options market that this is a correction within a medium-term bull market still on Bitcoin. Remember, I was suggesting that the long-end skew could be acting as a bit of a kind of regime signal. Well, so far the regime has not flipped into puts across the entire curve. So that's somewhat encouraging. And then Ethereum long end calls were very big. They have faded a little bit. Still parked in calls there, as you see, going out the curve, but not quite as expensive as it was now that we kind of rolled over quite violently. Looking at the ETH Bitcoin cross rate, it exploded through that downtrend resistance at 0.039. It got all the way to 0.043, so 10% through there. It is consolidating a bit now, but it does look set like it could go a hell of a lot higher. Maybe first target something like 0.05. So don't be surprised to see another 20-25% outperformance on ETH in short order if this thing gets going again. Front end vol spread though did slip in the weeklies as Bitcoin Gamma caught a bid, but then looking out sort of a couple of weeks out, you can see Ethereum shifting higher again by a few vols. So that whole curve shifting in a bit of a parallel fashion. So really Ethereum vol showing no signs of kind of coming back or giving up any of that premium relative to Bitcoin, just because the realized vol has just been so consistently outperforming for so long now. And Ethereum has stolen the limelight and the narrative from Bitcoin. So it's like, why are you going to be fighting against that? It doesn't make a ton of sense, right? Front end skew spread, as you can see, up to 4 vols, which is just saying that Ethereum front end is 4 vols towards calls relative to Bitcoin, but actually it's running at flat and Bitcoin's input premium. That's where that jump has come from. And then obviously, as you go longer dated, it kind of neutralizes a bit, but you are still seeing about a 2 vol call premium over on Ethereum relative to Bitcoin. So very much options market saying this Ethereum bull market is in play. It could still have a lot of legs to run, and we are not getting in the way of it, basically, right? If anything, we are using those options to play it. So, all right, I did put on a discretionary trade on Ethereum, just because I'm probably a bit underweight than what I would like to be right now. So I was like, rather than buying futures up at all-time highs, I was like, what do I want to do? So I did put on some December call ratio back spreads where I sold December 5,000 calls and I bought 6,000 calls times 2. That didn't cost too much premium. And what that does is if we do get a break of 5,000, I wouldn't be surprised if we go to 6, 7, 8,000 really, really quickly, the way this thing's trading and how parabolic it's going. And it's just because Ethereum just doesn't have the depth of liquidity to basically supply all these treasuries that are just buying billions and billions of the stuff. So if they want to continue to have market impact and drive this thing up to 10K, then I don't want to be left behind and not have any exposure. So by doing that call ratio back spread, I get a bit of an insurance that if it does start to explode sooner than I'd like, I do kick into some Greeks and kick into some Delta up there, basically. All right, guys, that is it for my crypto vol update this week. And I'll catch you guys back again next week. Cheers.
Hi everyone, thanks for making it to the end of the video. Remember, this is just a little taster of what we do at Options Insight. To get access to all our research, including my in-depth vol market insights, flows and positioning report, and my portfolio trades, and a whole lot more, you can sign up at options-insight.com. I'll see you soon.